Have you heard of infinite banking but have no idea how to get started creating one? Well, the next 10 minutes will change all of that for you. I'm about to share the top 3 secrets of infinite banking you'll need to start right now. Okay, so first and foremost, just really ask yourself are you a good fit for an infinite bank? Because if not, don't even worry about it. Now, here's who infinite banking are not good for. First off, if you're in horrible health, if you're over the age of 70, if you're in a place where you're paycheck to paycheck, this is not going to be a good fit for you, okay? Infinite banking does require some extra cash. If you're in bad health, it doesn't work great for you in that situation. But I will say this, if you are married to someone who has great health, or you have kids, this could still work for you, okay? So there's the little caveat for the health thing. But for the most part, if you're over the age of 70 or you're just really paycheck to paycheck, you don't have a lot of extra money to save, don't do the infinite banking. But if you've got extra money you're saving, I'd say at least $5,000 to $10,000 a year you're putting away, and you're in great health. If you're anywhere from your 20s all the way up to your 60s, this can be a great strategy for you to be able to use in your life right now. Well, now the next thing everybody says is, well, how do I determine how much to save into these? What do I put into it? How do I fund this? Perfect question. First, how I determine this is find out how much you're actually saving per month or per year currently. I don't think we should be using a lot of extra cash that you may or may not have, but what are you putting away right now? If you're only putting away $10,000 a year, we probably wouldn't want to put any more than $10,000 a year into these policies. Generally speaking, I have people put in a little bit less than whatever they're saving per month or year. Oh, key bonus. If you want to save more money on these policies, pay yearly, not monthly. You can pay monthly, but you will pay more money just like you do with your auto insurance, right? If you do your auto insurance, you pay it annually versus monthly, you'll save some money, right? Life insurance, even more amplified. So that's a key tip for you is buy annually. However, whatever you're saving per year, per month, doesn't matter, figure out that number. So if you're saving $1,000 a month, that's $12,000 a year, perfect. That money we can use to go do your infinite banking policy. I would put the maximum amount that you would fund, maybe about $10,000 a year. The good news is if you use a max ROI infinite banking policy like what we create, what will happen is you'll notice that your minimum is only about $2,000, $2,500 a year. So if you're already putting away $1,000 a month, after 2 or 3 months, you've already saved your minimum that you actually have to fund into it. All the rest is just gravy. It's just extra, okay? So that's one way you could do it. People will say, well, where's that money coming from? Money you're putting into savings, money you maybe putting into 401ks. We have lots of clients stop funding their 401ks when they realize the match doesn't give them that high of return anyways. And 2, they can use that money to make more money now, create real passive income today. So we have a lot of people stop funding their 401ks, taking that money, using that to fund it. All the money that they're using to save in general, whether it's saving for the future, sometimes even saving for vacations or taxes, using that money to fund into here. But again, I would put that maximum amount that you fund into a policy less than whatever you're putting away. Just recently I had a guy that was able to put away about $60,000 a year. I recommended that he do an infinite banking policy of no more than $40,000 or $50,000 a year, making his minimum required premium on that roughly about $10,000 a year or so. That made it a lot easier because even though he could put away $5,000 a month, great, he's only required to do $10,000 a year, and then everything else is just extra to build up his cash faster. So that's how I determine how much you save into these things. Don't do the whole dump money in thing where they say, hey, dump in a couple $100,000 and then pay a lot less down the road, or dump in tens of thousands and then pay a little bit down the road. Don't do that. The reason they recommend that is because it makes them more commissions, not you, okay? So be sure that you're actually funding it with money that you're able to save each and every year, okay? Another key thing, buy whole life, not universal life. There's different types of universal life. There's regular universal life. There's index universal life, which has gotten popular over the last 15 to 20 years. There's even variable universal life that goes up and down with the stock markets. This does not really work with universal life. Now, I know every universal life insurance salesman will argue with you and say, no, mine works. Pay me money, please. I need to make this commissions because I can't feed myself because I don't have any investments to make me free either. Don't listen to these guys, okay? Universal life is what I used to sell when I was a financial advisor 20 years ago. In fact, I even used to sell indexed universal life before it got popular with most of the other insurance agents. Here's the problem with them though. They do not give you the double dip effect. You can borrow from them, there's no doubt, but they have crazy things like surrender fees. The cost in those policies go up every year. The costs increase in those policies. So if the market doesn't quite do like they predict, because they say, oh, it's going to go straight line up for 7 or 8% a year, bull. Never does that, and you can actually start losing money. When I trained other insurance agents how they worked, they would ask these same questions. I'd say, ooh, yeah, that's a risk. Oh, that's another risk. That's another risk. There's a lot of risk with these UL policies. I would also say this though, the biggest thing is you don't get the double dip effect where you can make money inside the policy, earning extra returns above and beyond the interest rate. You can't do that with universal life, or most of them at least, where you can do that with whole life. Plus whole life's guaranteed. It's not, bipolar. It's not crazy. It's not unpredictable. It's very boring. And to me, boring is sexy, right? At least that's what my wife tells me. Wait a minute. Well, anyways, so buy whole life. Number 4 is shop around. I mean, the best way to know if you're getting the best deal is try different people out. The one thing that shocks people is we say, listen, if you got other people you want to shop around with, do it. In fact, we'll give you referrals. Now, you may or may not trust our referrals, but we know some good people in the industry. We know good, honest, trustworthy people, but we also know this, we'll beat them all. Okay, we'll beat them all. This is why we call ours a max ROI infinite banking policy, because our policies are guaranteed to have, if not the same, usually more cash value than what the next person will have if it's apples to apples comparison. So shop around, make sure it's apples to apples. And you know what? And ask the insurance agents, hey, are these apples to apples? Because the truth is many times they'll try to do little things, tricky things to make it seem like it is, and it's not. So you might give them an example. You say, listen, this is what I want to see. I want to save. And you might say $12,000 a year for the next 10 years or $12,000 a year for the next 20 years. Show me that. And have them run the numbers. And then the next person say, hey, this is what they sent me. Run the same numbers. What does yours look like? And there you go. I promise you this, from our standpoint, if you send it to us, we'll give you our honest opinion. Like we won't BS you. We won't do anything that way. But if you reach out to us at moneyripples.com and say, hey, can you look at this for us? We'll say, yeah, we'll look at it for you. And if they do happen to beat us, great, we'll tell you. I'll tell you this, if they do happen to beat us, which doesn't happen, but if they do, I guarantee we'll find any way possible to try to beat that. But over the last 15 years, we've done a pretty good job finding a system and making the numbers work to work best in your favor too. So don't be afraid to shop around. It's okay to do that. Even if this person's your best friend or your brother-in-law, shop around. The best way to know is to see what else is out there. I can already tell you, our clients are spoiled rotten because many times our clients will say, well, how do I know this is the best? How do I know this is really the best thing around? Well, go shop around, go look at some other examples. They'll look at them and they'll say, ugh, that's gross. This is horrible. Where's my cash? Where's my money? Right? Well, I know where their money is. It went to the commission's pocketbook of that other agent. The one that has the big belly and the too short of tie of the suit and everything. That's who it went to, okay? Shop around, really get to work for you. I'll give you an example. I had a client came to me, and actually we weren't even trying to get them an infinite banking policy. They were hiring us actually on the consulting side to help them get out of the rat race to create enough passive income to be financially free. But while we were doing that, they said, hey, Chris, we bought these infinite banking policies about 5, 6, 7 years ago. Can you look at them? Can you take a look? And so we looked at them. We started looking at the policies, and I thought for sure, you know what, just keep doing what you're doing. It's not the best, at least the way it was set up, but don't dismantle them right now. Well, what shocked me was when I actually ran the numbers and we did it apples to apples, truly apples to apples. And by the way, you can move money from old policies into new ones, tax-free. You can move it over. We found out that by moving their money over, doing the same kind of funding they're already doing, get this, in 20 years, they were able to make an extra $2.25 million more, $2.25 million more in just 20 years, putting in the same money they're doing already, but just doing it in a policy that's a max ROI infinite banking policy. That's what we were able to show them. Shocked me, completely shocked me. I didn't think it would be that amazing, but it was. But again, if it doesn't make sense, we'll tell you. There's been times I said, you know what you got is good, keep it, but maybe this is how you fund it for the future, okay? So that's our promise to you. We won't jerk you around. We won't give you any BS. We'll make sure it's the best thing for you. So feel free to shop around and use us as one of those that you shop with. All right, guys. So if you love this and you want to know how to use it some more, here's a video about how to buy a car with infinite banking. Check that out.